you do know that earnings is a very important time of a cycle in the market, right? And earnings, a lot of people wait for earnings to be able to make decisions on stocks, whether they're going to miss or whether they're going to beat. But the big thing is to try to get ahead of the curve, trying to catch stocks where you think the earnings will beat or won't beat and play the right direction. Well, this video is going to have some 10 stocks that have earnings coming up. This is a very busy earnings week. And I'm going to give some insight on all 10 of the stocks to help you to decide whether or not you want to put your money in these plays or not. All right, with that, let's get right into the software. No news today, not even doing any news. This is straightforward into 10 stocks that I have for you. Now, one of them is not an earnings play, but it's a stock that's really on my radar that I want you to take advantage of. So it is an added bonus to 9 stocks that have earnings coming out. Now, the first thing is, once you put these into a watch list, they're automatically sorted by our master indicator, VST, and all of these stocks have a VST above 1. So that's a positive thing. So all of these stocks have earnings that are coming out this week. They all have VSTs above 1, but let me back up a little bit. We do know that the market looks like it may have some downside right now because of the economy and what's going on from an economic standpoint. The raising of the interest rates, people are cutting back on jobs and all of those different things. So I want to preface this by saying the market's conditions move about 80% of the stocks in the market. So no matter if these stocks beat or not, keep that in mind overall when considering buying or selling any of these stocks. All right, with that all being said, again, the VSTs are all above the values of 1. Out of the stocks, we have Crocs, we have Merck. I like Merck because it's a drug company that's been around. It's got a lot in its pipeline. So is Eli Lilly in the same position. Enphase is a great stock, grossly overvalued. Why? I think the market as a whole is overvalued. More people putting money into the stock market, not putting it into the bank because they're not getting the interest rate. But that may change very soon. ServiceNow, a good stock in the space of protection. McDonald's. Now, everybody's got a kid or knows a kid who loves McDonald's. You remember the time when you say, Mom, I want to go to McDonald's, and your mom says, you got McDonald's at home, and I'll show you. Well, she tries to make you that McDonald's burger. It ain't the same thing. So McDonald's still has a flair. I'm looking at the earnings or the relative safety. It's a relatively safe stock, a company that continues to make money. The earnings growth rate does bother me. It's only at 5%. It is overvalued. This is my bonus stock, Tesla. I've been talking a lot about Tesla. I think short-term Tesla has more pain. I like this play, TSLQ. And if you want to know more about when I think the downturn on Tesla will occur, you need to pay attention to our channel because I talk a little bit about that as well. Hilton, travel is picking up. As the world opens back up, a lot of traveling. I like Hilton. I like the hotels right now. Earnings growth of 26%. I like that. Pepsi. Coca-Cola just announced and they did better on raising prices of the product. I don't know if Pepsi's going to be able to do the same thing, but it's a world-known name. They grow their earnings at a clip of 10% a year. General Dynamics is another stock. Now, this is undervalued, good upside potential. The safety is not quite where I'd want it to be, but from an earnings perspective, earnings growth of 12%. So as I look at these, another thing I like about this list is that it's nicely diversified. Let's go do this. Auto fit the columns. I do like the diversification of these. Apparel, drug, energy, drug ethical, 2 drug ethicals. That's Merck and Lilly. Software business, food restaurant for McDonald's, an ETF, that's TSLQ, leisure hotels, food prepared aerospace. So going into the earnings week, a busy earnings week, I think this is a very well diversified list of stocks. Now let's sort this by RT. Which stocks are on the rise faster? Crocs, Eli Lilly, TSLQ. I'm telling you, don't sleep on this bearish trade on Tesla. Again, I still like the company overall fundamentally, but right now I think the short-term pain, you can take advantage of it if you're on the right side of the trade. All right, let's go sort this by VST all over again, and let's graph these before we go. Again, told you it's going to be a short to the point video. 3-month graph. Wow, look at Crocs. You can't. I think these are some of the ugliest shoes in the world, but you can't defy. You can't defy this. You know, moving up. up, breaking through a new high, undervalued, volumes there, rising earnings. Earnings growth rate is falling though. Even though the earnings growth rate is at 20%, it's still falling just a little bit. That's the only thing I don't like about it. Looking at Merck, sideways, a little bit of a channel above the 20-day, rising earnings, falling earnings growth. And that's a problem with drug companies. They've got so much stuff in the pipeline. They don't make money on all that stuff because of the FDA approving or not approving. But overall, moving up, undervalued. I do like it. In phase, man, such a great stock overall. Rising earnings growth. It is above the 20-day, bullish, big wick at the bottom of the candle. At a level of support, I think it's going to have some upside. And again, relative safety is at 1.13. Let's go to the next one. Wow, Eli Lilly looks even better than Merck. Rising earnings growth rate, a new 3-month high above the 20-day. I like it. Just like the barge. Ooh, I like it. Let's go to the next one. Now, in a little bit of a channel, but above the 20-day, earnings falling, earnings growth rising. Something I would keep my eyes on. Let's go to the next stock, McDonald's. Now, this is interesting as I like McDonald's. Are they making more sales but cutting into the margins? Well, it all depends on if it's layoffs going on. Look at the bars. They're getting smaller and smaller, but they are still rising above the 20-day, rising earnings growth. And this was telling me the lowering of prices and the laying off of people and going to more robotic means to serve people to save money. That's where the earnings growth is getting hit, but rising earnings nonetheless. Let's go to the next one. Tesla. I'm telling you, short term, I like this play. Elon Musk says it's not about margins right now. It's all about sales growth. With that, and the margins are falling, I'm telling you, I like this play. Not long term, though. I still think Tesla long term is a good play. Hilton, again, the world opening up, people traveling, even us. We're doing a 2-day seminar in Los Angeles. You might want to go to our website and check that out. It's live. I like it. Rising earnings growth rate. Keep your eyes on that with a relative safety. Now, the relative safety is at 0.89. We'll keep our eyes on that. Pepsi, nicely moving higher. Smaller bars, though. Rising earnings per share. Down day today. I wouldn't buy it today, but I would keep my eye on it. And last, General Dynamics is my more speculative play. I think that the aerospace and defense space is a good place to be. General Dynamics, though, with earnings coming out, relative safety at 0.99. Man, it looks more like it may not make earnings, but I'm looking at the earnings. I'm looking at the dividend, making so that people can get into it. Earnings growth, I'd keep my eye on that. So, folks, those are stocks to play this busy earnings week. I know the market is keeping their eyes on what goes on with these stocks. So I wanted to give some heads up. You can make the decisions on which stocks you like or don't like. With that, folks, this video is over. And until the next time, see ya.